What's up? What's up? What's up? What's up? What's up, everybody? It's Stocks and Stoves with Dad. And I know you're here for another one because it's going to be another one. And I'm always going to bring you another one. You get what I'm saying? So, anyways, just to update you guys, as you know, I crossed a milestone of 17K. I was almost at 18K. And then we just had a bloody bloodbath this past week in the stock market. So total, I'm sitting at $16,716.87. So that lets you know I take a beating. I took a beating. And then I also reallocated some positions, sold some positions and things like that. So I got a lot of dry powder just sitting down waiting for a good day to purchase. And today is Saturday, so I'm giving y'all an update, a weekend update basically. And as you can see for the day, I'm green, 0.23%, which is still ugly based on what I was just about to cross the $18,000 milestone. And it's just looking bad. So you can see the investing at the very top. You see my traditional brokerage account, $15,882.55. Then you see the Roth IRA on the right side at $833.78. So for the week, let's see. Look at that damage. 3.77%. That's $621.79. For the month, $458.96. For the 3 months, $574.17. Year to date, $795.68. For the year, positive $457.78, and all $5,754.86. So everything has been down. Everything has been down. So we got some dry powder in here, 1980.57 cents. I got a rum call. Let's just get into crypto. It's been crap. And this is one of the reasons why my portfolio is down. I took a hit on crypto big time. So for the day, I'm up $3.11. The week, I'm down $209.71. The month, I'm down $418.63. 3 months, $816.55. Year to date, $679.57. And for the year, $669.76. And all total, $652.95. All in all, crypto has been crap. And I only added crypto to my portfolio to help balance it out with the stocks, because sometimes when crypto is up, stocks is down. When stocks is down, crypto is up. But in this case, crypto has just been down. Don't let all this green fool you. It's been totally down. I lost a ton loads of money with XRP sitting at $1.94. This is ridiculous. I got it at an average cost of $2.48. I got 450 shares. Yeah. Buy the dip, blah, blah, blah. I'm not sure at this point. I'm just going to chill out on the crypto for a little bit until it rebounds. I'm going to sell some positions, and then I'm just going to focus on ETH, Ethereum, and Bitcoin. Even Bitcoin is getting the butt kicked left and right. Look at that. So total return, negative $244.28. This is my biggest position, I believe, in crypto, sitting at 6.28% of my portfolio. So let's go to Solana. This one's a big loser too. I got 2.1 shares at an average cost of $200, which I've been dollar cost averaging. This is 1.93% of the portfolio, and it's right now negative 36.63%, which is a total amount of $154.98. Look at the average cost. The average cost is at $200, and look at how much it costs today. $127.08. You see the big difference? Like, it just plummeted. It just went down out of nowhere, bro. And this sucks. It sucks. I actually like Solana, but it sucks right now. And honestly, as soon as I get my money back, I'm getting rid of Solana. It gotta go. XRP, I'm gonna hold on to it. I think there's a future position for it, but I don't know. For now, I'm going to hold on to it too. I'm going to continue the dollar cost average into Bitcoin. I got an average cost of $113,000. As you can see, it's only 1.87% of my portfolio, and even that one's negative 25%, negative 25.26%. Trash. It's going down, man. Ethereum, this is a good price to purchase. So I'm going to throw some money in Ethereum for sure. I got an average cost of $4,087.34, 1.11% of my portfolio. And that one too is doing trash. Negative 32.36%. But you know, crypto, man, is very volatile. As quick as they go up, they come falling down like swords, falling knives. You know what I'm saying? I'm still staking Solana, obviously. I'm staking Ethereum, and that's it for crypto. So my crypto portfolio is at a big loss, and I'm currently at $1,557.61. So, and as you can see, my all-time loss is 29.43%. It'll bounce back. I'll wait for it to bounce back. I'm not a huge fan of crypto too much, but I know there's a future for it, and crypto is here right now, and I believe it's here to stay. So we're going to keep doing what we do. Now, as you can see, my portfolio size has shrank. I made some changes. I sold some positions. I sold SCHD, but I did place it into my Roth IRA. I sold XLE. I'm sure I told you guys that. And I've been dollar cost averaging into SoFi, because SoFi has been down too. Although you're seeing it green today, it has been down. Even though I got in early at SoFi, I've been dollar cost averaging. I got a even amount of shares of $50 because I purchased, I think, 2 different times this past week. I purchased 5 shares each time, and I'll show you the differences in the cost so I can show you how much SoFi has been down. But I'm up on SoFi. Total return 74.07%. So you know I'm loving SoFi. I got it at an average cost of $14.64, and I will continue to buy SoFi. Today's return, even though the market is closed, I made some money today in my sleep, $28.65. So we're gonna let it do what it do. And let me show you exactly where I purchased the SoFi. Let's see here. SoFi. I know I purchased it twice. I purchased it. Where's the first time I purchased it? All right, it's not showing. I probably removed that notification, but I definitely purchased a day ago right here. Actually, here's where it's at. So I purchased on the 13th of November for $28.41 per share. So I purchased five shares that day, right? November 13 at 1:49 p.m. And then November 21st, as you can see, the price dipped by $3. I purchased 5 additional shares for $25.29. So you see the difference, 28.41. I purchased 5 shares that day on November 13th. And then on November 21st at 3:09 p.m., I purchased an additional 5 shares at a lower cost. So I'm dollar cost averaging into SoFi. I like SoFi. We're going to get into this. I got rid of this crap. OT, sinking ship. It was paying me weekly dividends, but I'm just going to stay away from Yield Max. Anything Yield Max, I don't want nothing to do with their high income ETFs that continues to die in NAV erosion. And when I mean die, like dead, it doesn't recover. And they're paying you these little return of capital every week, but the capital is just like diminishing. Soon they're not going to pay you jack anything, jack nothing. You know, I want to say something else instead of that word. I want to say the S word, but I'm not going to say it. They ain't paying you jack crap, basically, is what I'm saying, okay? So I got rid of that crap. I had 71.4 shares. I got rid of it at a loss, and I'm happy I got rid of it. I don't care it's at a loss. I just didn't want to lose anymore, so I got rid of that crap, all right? Energy transfer, I love that. I got a share. I received 3 shares at a cost of $16.92, and that's because of the drip. I automatically take my dividends and reinvest it back into the stock. So I got paid $56.63, and it went right back into the stock and purchased me 3.3 shares. So, we're going to leave that alone. I dollar cost average into BITF, which is a new position I got. Bitfarms, the mining company, who's supposed to be getting into the AI sector. The analysis says like 100% you should buy. So I bought for my reasons and my reasons only, because I understand the mining sector. But the fact that they're pivoting into AI, and they've already been, they got some kind of chip, battery chip that all these companies need to use anyways. So to get into AI is kind of like a smart position for them. So they're broadening up their the sector. So they're still going to continue mining and stuff like that, but mining is not going to be basically their primary um, business plan or whatever. So I got it at an average cost of $3.45, and I just been slowly dollar cost averaging into it. As you can see, the price really dipped, really dipped like around here. So let's look at the 3 week chart. Look, right here was at $5, $6. That's 3 months ago. That's in October, and right now we're in November. Uh, and look at it. Is at $2 from like five something to like $2 and whatever. So I'm gonna hold on to it. It has potential. Um, yeah, I'm gonna hold on to it. It has potential, and it's money that if I lose, I lose. I'm willing to lose, and I won't cry about it. 8 analysis rating, 100% buy. So I'm gonna hold on to it and see what it does. I'll definitely, I think I'm gonna get my return on this investment. Right now, I'm down $102.36. That's a percentage of 29.55%. So that is what it is. This is not a long-term play. This is just a quick play to make some money, and I'm gonna do that. I'm gonna make some money. Um, so I talked about SoFi, Apple, and Amazon. I'm letting it just do its thing. I'm happy with those positions. As you can see with Apple, I'm positive 78.27%. So I'm happy with that. Not much to say about that. With Amazon, I'm positive 81.53%. I'm happy with that. No complaints there. I'm happy with this one, although it's in red right now, and it's been going down in price, but it's still holding. I'm still in profit. I'm positive 40.81%. I'm getting dividends from this every quarter. No, not every quarter. Yeah, every month. No, every quarter. So y'all seen the dividend. I got paid 56 something dollars and bought 3 additional shares. Now instead of sitting at 170 shares, I'm sitting at 173 shares at an average cost of $11.75, and today is sitting at $16.55. I remember at some point it was sitting at 18. Nonetheless, this is giving it room to grow, and I believe in this company, and I'm going to hold on to it because it's part of the energy sector. I'm heavy in tech, so that helps me out a bit. SCHG, on dollar cost averaging into this position. It's a newer position for me. I'm at positive 15.96%, so I'm happy with that, and it's heavy in technology, which I told you guys I'm heavy in tech. As you can see, I got Amazon, I got Apple. And then I got this to kind of like, it hits up the communication services a little bit, consumer, healthcare, finance. But let's see, let's look at the top 10 holdings. NVIDIA, Microsoft, Broadcom, Google, Apple, Amazon, Tesla, Meta, Eli Lilly. So it's exposing me to NVIDIA, which I like. It's exposing me to Microsoft, which I like. Broadcom, which I like. Google, which I like. I already got Amazon and Apple, so it supports that too. It got Tesla, Meta, and Eli Lilly. So the top 10, I definitely believe in these companies, and some of them are very expensive to own right now. And I'd rather just have it in a fund like this where I get a little bit of everything. I'll continue to buy into focus on Apple and Amazon. I'm not really going to jump into anything else, at least not yet. And that's my stock portfolio. So that's how we're looking. This 15 needs to change quick. I'm ready to see 17, 18K so I can work up to 20,000. But it's okay. You live and you learn. And you don't lose until you sell. The losses are not realized losses until you sell at a loss. Like, for example, XLE, I sold in profit. It wasn't at a loss. But that nasty, ooh, that didn't cuss. The nasty OT, which was in my Roth IRA, I got rid of that crap. And you know what? It was at a loss, and it was well worth it because I didn't want to lose anymore. The junk of a ETF is not going anywhere. And quite frankly, I'm going to try to stay away from anything yield max. So here, let me see. I did tell you guys I got some dry powder here. 1980.57. That's from making some sales, and I think also an option play. Other than that, here's the Roth IRA. I'm building out SPYM. I believe I purchased an additional share last week. Let me double check and see when's the last time. Okay, so I purchased November 3rd. I threw in $2.11, which was probably to even things out, and that's at $80.37. That's the cost of the share. November 4th, the next day, I spent an additional $20. It was sitting at $79.62. Then the next 2 days, 4, 5, 6, 7, 3 days later, on November 7th, I purchased point 0.4 shares at $33.22 at an average cost of $79.05. So I'm going to continue to build SPYM out. I like this stock. This EFT is heavy in tech as well. Financial services, communications, healthcare, energy, blah, blah, blah. You get what I'm saying? Let's look at this top 10 holding. NVIDIA, Microsoft, Google, Tesla, Apple, Amazon, Broadcom, Meta, and Berkshire Hathaway. So I like this ETF. I did want some exposure of tech into this brokerage account, and I'm going to continue to buy the stock. I'm going to aim for, by the end of this year, I want to have at least close to 10 shares. I'm sitting at 3. So within the next couple of weeks, I want to have a total of 5 and then work my way up. You know how I like to do things, 5, 10, 15, 20, 25, just like my overall portfolio, and just try to have at least 50 to 100 of each shares. SCHD, you know, I've been holding that in the previous portfolio. I sold it and bought it back into the Roth IRA for tax purposes and stuff. But it's just been holding steady. The stock hasn't been really climbing up. Does pay good dividends, but it's just been holding steady. And the previous portfolio, I had it at a lower average cost, but because I sold out of that position to buy it into this portfolio, I got the price high. So I expect it to go down some, and if it does, that's just part of the game. But I understand this is a long-term hold. It's not something I'm holding for today and think I'm going to get rich tomorrow. No, this is a long-time hold for retirement and things as such. And this one's evenly divided, and I feel like it complements SPYM, which is heavy tech, because look at this one. SCHD is energy, consumer defensive, healthcare, industrial, a little bit of technology, consumer, financial services, communication services, basic materials, and utility. Now let's see what their top 10 holdings are. You see that? Big difference. It looks totally different from my traditional brokerage account, and it looks different than SPYM. And these are the two positions only that I have into this Roth IRA account. So I'm happy because it's an even balance. It's an even playing field. So let's see. Top 10 holding. Amgen, AbbVie, Coca-Cola, Chevron, Bristol Myers, Cisco, Merrick, PepsiCo, Lockheed, and Verizon. So I'm liking that, man. And look at the percentage of the allocation amongst these assets. 4.91%, 4.50, 4.17, 3.99, 3.90, 4.68, 4.50, 4.06, 3.96%, 3.83%. You see what I'm saying? So it's evenly distributed among these sectors, to whereas SPYM, Look at that. Technology, 35.41%. Communications, 10%. Healthcare, 9%. Consumer defensive, 4%, 0.97. Utilities, 2%. Basic materials, 1.49%. Financial services, 12.85%. Consumer, 10.17%. You see how it's uneven, but it's heavy in tech. And the top four is going to be tech, financial services, communication services, and consumer. So that tells you a lot, man. So that's what's going on. I'm enjoying the new beginning of this Roth IRA. I have a really good feeling that is going to do great because the way I have it allocated, I will add other positions to it. For now, I'm not adding any individual stocks. I'm just adding ETFs. That's just for now, just for the moment, until I figure out what I'm going to do with this portfolio. But I'm working on it for the long haul, just like I'm working on this one. I had to scale down, get rid of some things. But I just got to figure out this crypto mess, man. I don't think it's anything I got to figure out because I really got some heavy hitters, some good plays. But it's just the crypto market. It just sucks right now. So I'm really disappointed in XRP. But it is what it is. It's part of the game. You got to have skin in the game. You get what I'm saying? So you can't be afraid to lose. You're going to lose. It's going to go up. It's going to come down. But the overall trajectory in the market repeats itself. You get what I'm saying? So that means the same way it bounced down, it's going to bounce back up. And overall, the market is usually up overall. If you look at the 5-year, 10-year, you look at the statistics, you look at the math, you look at the data, it's up. So this is a good vehicle to make some money in. It's Stocks and Stoves with Dad. I hope you enjoyed the video, the update. I keep it transparent with you guys. When I'm up, I tell you I'm up. And when I'm down, I want you to see that I'm down. You see that? I am down. All of my portfolio is down. I mean, it's showing green today, live, it's showing green. You see as it's going up like this. But God darn it, I am down. Almost had 18 bands, and now I'm sitting at, total, total 16.720. So I kind of hurt about that a little bit, but I understand we here for the long term, and I understand how the market works, and I understand finance. So I'm not panic selling. I'm not panic buying. I'm not doing anything. I'm going to stick to the plan, keep doing what I'm doing, keep educating myself. I'm going to keep investing. I'm going to keep dollar cost averaging. I'm still going to build out my positions, and that's what we're going to do. So follow me on this journey. I appreciate you. Subscribe, share the video with a friend. We all can do this. I started with nothing and I got a little bit of something, and it's still pennies compared to some of the people that I follow and I learn from, and they got huge portfolios. I got my guy that I follow. I think his name Financial Freedom, or I'll remember and I'll give him a shout out in my next video. He always supports my channel and watch my videos, and I support him as well. He has in comparison to me, he has a large portfolio, like 90 something K, like 100 something K. And he got hit over the head. But I love watching him because he doesn't panic either. He does a lot of cover calls. He's a little more advanced than me, so he has a lot more resources. But shout out to him. He know I'm talking about him once he hear this. Shout out to you, my brother. You always share knowledge with me. I appreciate you. And other than that, peace and love. Follow, subscribe, share with a family member, share with a friend. Drop some comments because it really motivates me to continue making these videos. Stay tuned for the food segment because I will be cooking today. And I'm going to drop that video too. It's Stocks and Stoves with Dad. Thank you if you made it to the end. I appreciate you. God bless you. And I love you. Peace.